Welcome, my name is Vishal Tekshanani. Today I'm speaking to the A2 Milk Company's CEO and Managing Director, Jayne Hrdlicka, and we're going to talk about the dairy nutrition company's first half results, its expansion plans in China and the United States, and what it plans to do with its cash balance. Jayne, welcome. It's great to have you here. How are you?
I'm well, thank you.
Congratulations on a very strong set of first half results. Can you talk about how the A2 Milk Company strategy is different to some of your peers which seem to be struggling right now?
Sure, and thank you. It's a great set of results for the A2 Milk Company off the back of a long string of great results. And for us, I think what sits behind that is that we have quite a uniquely good product. We're the very best in dairy nutrition. It's great for parents to have the option to choose A2 Platinum to introduce their children into the world, to augment breastfeeding, and then to graduate their kids through the cycle of nutritional development.
Sure.
And so we've got a great product. We've got a very special brand that sits behind that product that's really connecting with mothers and parents in a unique way. And it's connecting with them emotionally. They understand what we're all about. They get the proposition. And that's got a natural momentum all of its own.
Okay. Let's talk about channel shifts in marketing. So I interviewed now the former CEO of Blackmores last week who talked about some headwinds in China with respect to how retailers are targeting customers and changing trends in how Chinese consumers are buying products. Are you experiencing any of those headwinds, and will that mean that you'll also need to ramp up your marketing spend?
We're having a very different experience in market, which is demonstrated by our results, I think. What we're very conscious of is that China is one of the most dynamic consumer economies in the world, and things do change at quite a rapid pace. We've spent a lot of time in the last 6 months being really clear from the voice of our consumers what matters to them, where they like to shop, why they choose us, and how we best line up in the way we build our company to deliver against what matters. And our multi-channel strategy into China is clearly really important, and we're ever more convinced that we're on the right path. We have quite a unique way of managing our channels that's given us quite a lot of stability over time, and I think that's what's enabling us to be quite strong half after half as we build our brand in market in China. The other thing we're really clear about, though, is we've done a really good job building our brand from the Australia side of the channel mix, and we're now investing quite significantly in building our brand in China. We're doing that off the back of quite a lot of insight with respect to what really does matter to Chinese consumers, how they do use the channels, and how loyal they are to us once they have engaged with our product suite.
Let's turn to your growth strategy. So you flagged two major markets where you're looking for growth outside of Australia. So China makes complete sense, and the United States. I'm really curious to know why America, given other developing nations like Indonesia, Vietnam, they've got strong population growth. They feed into that whole theme of the rising Asian middle class. Why is it that you've decided to go looking to America for growth, and especially given the administration there has, I guess, an America first ethos?
So for us, it's quite a simple exercise in the math. The US and China are the two biggest consumer economies in the world. And while the US is much more developed, it is a market right now where the consumer landscape is changing pretty significantly. Consumer products companies are struggling. Traditional legacy consumer products companies are struggling because consumers really want something that is fresh, natural, a brand that speaks to them, that has a sense of purpose in the way they think about their lives, the way they want to raise their children, the way they imagine themselves moving through various stages of their lives. And so we think it's a perfect time for us to introduce the product into the US. We've had great reception from both consumers and retailers. To be in roughly 12,500 supermarkets selling A2 fresh milk in the US is an extraordinary achievement in a very short period of time. And the consumer following that we're building behind those stores carrying our milk is significant. So we've also announced in the second half that we'll be investing more money in marketing to build the brand in the US as well.
Okay. So you're seeing strong customer advocacy in America, like you are in China and Australia as well.
And it would be wrong to say that we're not thinking about the rest of Asia and that we're not mindful of the growing middle class in Asia and the dynamics at play at play throughout the region. But when we think about our priorities, making sure we've solidified our brand position in the US and China and then built the right suite of products behind that consumer franchise, well, that's our first and second order priority. And then right behind that sits the opportunity to build out new markets. Okay. And we're building the capability to do many new things.
Great. Let's turn to your cash balance. So you have ended the December half with a cash pile of nearly $300 million. What are you planning to do with that money, and is there the prospect of some type of a capital return?
So what we are telling all of our investors at the half year, similar to what we did at the full year, we don't expect dividends or share buybacks at any point in the future, in the immediate future. We're a very high growth company. We have an extraordinary opportunity to continue that growth momentum, and the funds that we generate we're putting back into the development of growth pathways for the company, and that will be our future for the immediate term. And we're quite proud of the fact that we've been self-funding our growth, and there are very few companies that have the luxury to do that, and that's absolutely the right focus for us for now.
Okay, let's turn to some of the risks, and two in particular I'd like to talk about. So your competitor Nestle is introducing a competing product in the A2 beta casein protein, the baby formulas, and the risks of the China-US trade talks. They are progressing. Donald Trump has said some good things about those talks, but in case there is a fallout, does the A2 milk company have a contingency strategy, I suppose?
Sure. So if I think about the issue of competition, we've actually seen competition now for over a year with competitors putting A1 protein-free propositions into the marketplace, and they've had very, very little traction. And what we conclude, based on quite a lot of analysis on what's happening around us, is that our A1 protein-free proposition is all bundled up in our brand. Okay. And so consumers look at us less as a category and more as a very special brand that connects with them in a unique way. And so I think competitors are finding it quite difficult to compete against that, because it's a strength in our brand and all the IP that's embedded in our brand that is actually the insulation for us as we stare into a very significant opportunity in the future. Okay. So we're feeling quietly confident that we have lots of competition, but the competition we're least worried about is competitors adding in to their SKU mix in the various brand families an A1 protein-free proposition. That's the least concerning to us.
Okay, and trade talks, any worries there?
Look, there are things that you can control and things you can't control in running your business. And we're very conscious of the things we can't control, which includes geopolitics. And we make sure that we understand what's going on, and we're very respectful of those debates and dialogues, and we try to influence where we can. But at the end of the day, we have an extraordinary responsibility because we're serving the nutritional needs of the youngest and most vulnerable people in China, which are babies and young infants growing up. And we're just staying very focused on listening to mothers, listening to parents in China, listening to the government and the regulator in China to make sure that the way we're building our business is for the long term, mindful of what's expected of us as a very respectful producer of an extraordinary product that really does genuinely make a difference in people's lives every day. So our focus stays on the things that actually matter in our business, which is all about parents and doing the right thing, and then making sure that we're building our business for the long term in the eyes of each market that we're operating in.
Okay, Jayne Hrdlicka, thank you so much for coming in, and pardon the pun, but I hope the A2 Milk Companies continues to milk some great shareholder returns and produce some quality products for consumers.
Well, that's fully our intention, so thank you. It's a pleasure to be here.
No problem. I hope you found this video informative. Now, please remember what we talked about today isn't investment advice. If you're thinking about transacting in shares of the A2 Milk Company, it's really important that you do your research, and please consider seeking financial advice. My name is Vishal Tekshanani. See you next time.